How to get a loan for a mobile home park. Thinking about buying a mobile home park but don't know how to get a loan? Well, this will be the right video for you. Can you really get a loan for buying a mobile home park? Yes, you can. In this video, we're going to break down the different loan options for you as an investor. Banks can be picky about mobile home park loans, but there are loans out there. We're going to go over the different types of loans that are available to mobile home park buyers. By the end of this video, we're going to go over the different financing options available for mobile home parks, what lenders are looking for when financing a mobile home park, and then what mobile home park loans are right for your situation. Understanding mobile home park loans. Well, to start out, mobile home parks are commercial real estate loans. They're not residential loans. And what we're talking about here is financing the land. We're not talking about financing mobile homes themselves. So when getting into mobile home park investing, we want to find the right lenders that are going to meet our goals in our investment activities. So there's a few different options here. And just so you know, SBA lending is not available to mobile home parks. So there's no SBA loans available. But there's a lot of other options available. Number one is going to be your local bank or credit union. They are going to be the best resource for you, but you need to go in and interview that commercial lender. Not all community banks like mobile home parks. Some love them. We use a couple that will travel with us across the country, but typically you're going to want to focus on the region that you're going to buy your mobile home park in. These banks are going to look at cash flow because it's commercial real estate. They want to know, is the property going to cover the debt? If you're serious about getting a loan for your mobile home park, then go in and build that relationship with the bank up front. When I started my career, I met with a bank in Nebraska because I knew I was going to be buying a mobile home park out there. I was searching for deals and I didn't have a lot of credit. I had no reputation with that bank and I lived in Nevada. So I opened up a depository account and I bought a CD. I bought a $5,000 CD and then I borrowed against it. They gave me a $5,000 consumer commercial loan and I was able to make payments on that loan for a year. And I was now in their system and they had the CD as collateral. So they were willing to give me the loan because if I didn't pay it, they just take my certificate of deposit. And that was a great way for me to get in the door and be a preferred client for them. And when I found the mobile home park that I wanted to buy, they liked mobile home parks and they were ready and willing to finance it because I was in their system as a good borrower already. I love that trick, and that's something that everyone should do if you're trying to build that local relationship with that community bank that you want to work with. Other types of loans, Fannie and Freddie Mac government-backed loans. Now these are going to only be available for higher quality, nicer mobile home parks. They have restrictions where you need a certain amount of occupancy. I think it's 80% occupancy in the community. And these organizations are government-backed, meaning that they ensure that the lender is guaranteed that the loan will be paid because the government is guaranteeing it. So lenders are very picky about what mobile home parks they put into this program, yet it's a great program because rates are quite competitive. They allow for long-term financing, fixed, where your interest rate isn't variable. It stays fixed for 5 or 10 or even longer years. And there's typically not huge prepayment penalties. If you do sell off that property and you're gonna exit out of it, you don't have this large fee that you're going to have to pay to the lender for all that interest that they think they're owed. Next loan, CMBS, meaning commercial mortgage-backed security. These are the larger banks. Bank of America is one of the lenders, Wells Fargo. When I started out and started to grow my portfolio with a partner, we got to a point where we were going to buy each other out. I was going to buy out his assets in the Midwest, and I was going to buy him out of our assets in Nevada. And when I did that, I was just rebuilding my credit. I got a foreclosure 7 or 8 years earlier. It was actually with Bank of America on a residential loan when I lost everything in the 2008 housing crash in Las Vegas. So up to that point, I could barely get a credit card. But because I had these assets with the partner that we were able to build equity and we were able to show that we had cash flows, and the first time in my life, be able to get a $10 million loan with Bank of America, paying off my partner and having a payment, I remember it, $65,000 a month. It scared the heck out of me. And I was able to pay that down every single month and collect a cash flow after I was able to accumulate all those properties together and generate profits. So CMBS is a great option, but there's some limitations. The limitations are, one, they're very, very picky. They are going to make you put a reserve in there for all of the improvements. They're going to inspect the property each year, and they're going to make sure that you do the improvements that you promised to do out of that reserve that they held back in your loan. Next, there's a big prepayment penalty. So when you get a CMBS loan and typically they only like to do larger loans, at least $3 or $4 million minimum on the loan amount, they're going to require that you pay a large amount of that interest if you sell off the loan early. Now, the good thing is maybe the buyer can assume the loan and take over your loan balance, but if the buyer doesn't want to take over your loan or they don't qualify for it, you're going to have to pay 3, 4, 5 years of interest that you promised that the bank that you would pay, and that's going to eat into your profits on the sale. The interest rates can be pretty good, but in 2025, they're still pretty high, around 7%. So if you can look at working with a community bank or a regional bank, that might be better for you if you're just starting out in mobile home park investing. And then lastly, seller financing. The seller is always going to be your best lender. Why would they want to do that? Well, they want to save on taxes. If you pay off a seller and give them all cash at the closing, they typically have depreciated the property down to nothing. We're going to get into that in future episodes where when you sell a property, we're going to calculate how much in tax am I actually going to have to pay versus how much money I receive at the sale. And this affects the sale dramatically. Many sellers that are selling their mobile home parks have owned these businesses 20, 30, 40 years, and they've depreciated the property down to nothing, so there's a huge recapture. Basically, what that means is there's a large tax bill that they're going to have to pay, and many of them are conservative, and they do not like giving the government any money. So if you could find a way to defer that tax where they are the lender, you give them a down payment, and then you make interest payments to them over time, they love that idea because they don't have to pay a large tax bill, and they get a nice check in every single month, and who doesn't love being the bank? So down payments. How much money do I really need when I get a loan for a mobile home park? Well, if we look at seller financing, it's fully negotiable. I've put as little as 3% down on a mobile home park, and the seller was able to get the rest over time, and I paid 6% interest to them over 7 years. Now, with a conventional bank, you're looking at anywhere on the low end, 20%, but that's pretty rare. Typically 25 to 30% of the overall cost of the property is going to be the down payment you need to come up with. So if you're buying $1 million mobile home park, you need to have at least $250,000 as the down payment, plus some reserves. Don't forget to have some money available to operate the business and make improvements to the property, because sometimes the lender won't fund that for you, and you're going to have to bring that out of your pocket or raise that capital with your investors. So with CMBS, they typically are going to want 35 to 40% down, and they're not going to allow any loans behind them. So you're going to need a lot more cash up front in order to use that type of loan. And then lastly, Fannie and Freddie, they're going to be looking for at least 25 to 30% down as well. So you're going to need a significant down payment. Plus, you may need some additional money for those improvements on the property. So if you're looking for the highest leverage or the highest loan amount, work with your community bank or work with the seller who's going to finance you. And what are the interest rates? Well, right now in 2025, they range anywhere on the low end from 5.5% with the government-backed loans up to 8.5% with a local bank that may not be as comfortable with mobile home parks, and they're going to charge you more of an interest rate due to the risk. One lending option that I didn't share in this video was hard money loans, or also called private money loans. There are lenders out there that like to lend on mobile home parks, and they are private individuals that lend money in first position. They have the first mortgage, but they charge large interest rates, typically 10, 12, 13, 14 or more on interest, and they charge you points up front. They could charge you 1, 2, 3 points up front, meaning 3% of the overall loan amount right at the time that you close the loan. Those are the options you have available to you. We will dig into how to analyze mobile home parks on the next video. So click on the link above. I will show you the ins and outs of how to calculate your return on investment for a mobile home park investment. And if you have comments, put them below. I would love to see what's the best mobile home park deal that you've found, or if you're an investor in a mobile home park, what are the best investment deals that you've invested in? I want to hear where they're at, how they performed, and what you learned about what happened throughout that investment or when you purchased the mobile home park. There's always some good stories out there. I'll share mine with you. So make a comment below and let's have a conversation.